broader market is still under pressure. The mid-cap index is down 60 points. Now the Nifty is falling, down about 25 odd points.
Today, there's a lot of move towards FMCG and consumer stocks, the perceived safe havens of the market.
We have the Nifty, which is up around 17 odd points. But remember, it's been a tight range. It's been volatile within that range.
We are in the third bounce on the Nifty, third bounce of the day, and we are trading at almost at the day's highest point. It's a positive daily close after, I think, many sessions.
Hello and welcome to CNBC-TV18. You're watching Markets Today, the show where we track about 6 hours of the day's trading action in just 5 headlines. I'm Ekta Batra. Here are the top stories for this evening. The sensex and the Nifty snap a 5-day losing streak to end flat thanks to a last-hour recovery, but the Nifty fails to hold the 17,000 mark. Metal stocks are the biggest drag. Metal stocks are the top losers in the weak market. Metal prices decline overnight amid global worries of a banking crisis. Nifty Metal was down over 2% in trade. ICICI Pru Life Insurance soars in trade as Anup Bagchi gets appointed as MD and CEO. Zee Entertainment fires up on reports that it is set to repay IndusInd Bank $10 million. The NCLAT has stayed an NCLT order admitting insolvency proceedings against Zee. Titan gains on the back of an expected rub-off on its eye care business valuations after Abu Dhabi Investment Authority invests $500 million in Lenskart. Samvardhana Motherson falls after promoters Sumitomo Wiring Systems sells 3.4% stake in multiple block deals, while Patanjali Food slips as exchanges freeze the promoter shares over its failure to meet minimum public shareholding norms. All right, but let's also tell you what we have lined up in the next 30-odd minutes. We'll bring you market opinion from James Sullivan of JP Morgan, and in Corporate Voices, we have with us Sameer Khetrapal of Jubilant FoodWorks, Sanjeev Asna of Patanjali Foods. All right, let's get to the first story then. Let's get to the market action. The recovery across Europe helped the Sensex and the Nifty end in the green, but the gains were modest, with the bank stock swinging wildly in trade. With this, the Sensex and the Nifty have managed to snap what is a 5-day losing streak. However, the Nifty failed to hold above the 17,000 mark, ending just below that level. Prashant Nair is here with a wrap.
We had finally a positive daily close on both the Nifty and the Bank Nifty after 5 days of extreme amount of pain. The moves are extreme, like they are in global markets across asset classes. And I think the volatility is just at historic levels globally. And it was the case here in India as well. The change that you see on both the Nifty and the Bank Nifty do not tell us the whole story because there was so much up and down and so easily which happened through the course of the day. Let me get to sectors quickly. So media went up, FMCG was higher, real estate as a pack was up, and metals were lower. But this is a bit of a flip-flop, and markets do feel a little dislocated. Metals, which lost heavily today, were the top gainer yesterday. FMCG, which was the top gainer today, was the top loser yesterday. So, I mean, there was this element of a bit of randomness, which was also very much at play. Nothing has changed in terms of fundamental drivers. Consumer companies and FMCG, as I said, so stocks, Nestle, Lever, Asian Paints, Titan were the gainers. Oil prices fell very sharply. Over the last 2 days, they're down heavily. Oil marketing companies did well. And as I said, metals were lower. So Hindalco, Tata Steel, JSW Steel, all Nifty companies, which lost quite a bit. In the broader markets, more losers than gainers. So the losses coming through in names like Motherson. There was, of course, that block. PNB Housing for the second day, big losses. Fluorochem, DCB Bank, and All Cargo Logistics, which was lower as well. And gainers coming through in many news-related stocks. Zee was 1, ICICI Pru was 2, and DLF was number 3. But there were other gainers like Zomato. Ambuja Cements is doing well. It's up almost 9% in 2 sessions flat. And Hindustan Zinc was higher as well. I think the global cues are the driver. It's the head, we're the tail. And I think it comes into sharp focus with the ECB meeting today, the decision which will be read very minutely. And of course, there is data out of the US, which markets will watch very closely for any signs of further disinflation, because next week we have the Fed. Back to you.
Okay, all right, Prashant, thanks very much for that. So that's what took place in the markets. Well, let's get in some market opinion then. James Sullivan of JP Morgan says that he is neutral on the Indian market at present and adds that he is positive about the banking sector in India.
We had gone neutral on the Indian market on the expectation that you'd see a pause in market performance, given the fact that most investors were already exposed to the market. What we saw late last year, earlier this year, was a very significant country rotation trade out of India into China. We still see what we would argue are potentially the last vestiges of that today. A number of investors are still playing a China reopening trade. In addition to that, you have an SOE restructuring trade ongoing in China today, where the regulatory environment is moving away from an EPS growth forecast and towards an ROE forecast. And you're seeing significant outperformance of safer dividend yield plays like the China telecom stocks at this stage. And so that's offering an alternative. From a medium-term perspective, we still do see very interesting prospects for India. If we look at the banking system in India, we are still positive. We have been for some time. The recent weakness offers potentially a medium-term buying opportunity. Domestic demand, particularly in the domestic consumption stocks, looks very interesting. And select CapEx plays off the back of corporate spending. One of the things that we got out of the Indian budget is that the infrastructure spending is there. It's not necessarily higher than expectations, however. So that is an incremental driver of infrastructure stocks, is potentially a little bit more limited than what we would have liked to see.
Okay, well, on to the second headline now. Metal stocks are the top losers in a weak market today. Metal prices declined overnight amid global worries of a banking crisis. Nifty Metal was down over 2% in trade. Manisha Gupta is here with the details.
Oh yes, another day of decline for the metal prices today, and very sharp at that, and the US dollar rebound did not help the cause. We are trading back above 104 for the dollar index, and that weighed on the dollar denominated commodity. Apart from that, the banking instability continues to weigh on through the demand growth going forward. China as well, when you look at the economic data for 2023 till time, has been lower than the street expectation. The demand growth hasn't been so strong, and then the new home sales declined for a 10th straight month. That weighed on to many of these prices also, and the markets are still awaiting China's stimulus measures for infrastructure, construction and consumption yet. The copper Shanghai inventories have declined to the January lows, but with even that, the markets clearly shrugged that off. Steel prices declined 3% overnight and are trading in the negative during the day today as well. So when you look at the week itself, we have seen prices decline by nearly 4% for copper. It's down for 3% for aluminum, 3.5% decline for zinc, 0.5% of a cut coming in for steel as well. So there clearly is no metal really which is trading in the positive for this week. Sharp declines is what we've seen across time zones.
Okay, all right, Manisha, thanks very much for that. Let's move to the third headline today. And then ICICI Prudential Life Insurance sought in trade on getting a new boss. The company has announced the appointment of ICICI Bank veteran Anup Bagchi as the new MD and CEO for a 5-year term starting June this year. Yash is here with the details.
Well, that's correct. And the most interesting part is that the incumbent ICICI Prudential Life CEO, N.S. Kannan, was also appointed when he was the ED at ICICI Bank, and similar is the case with Anup Bagchi. Anup Bagchi will be taking over as ICICI Prudential Life MD and CEO from June 19, 2023 as N.S. Kannan superannuates his term as ICICI Prudential Life MD CEO on June 18th. Bagchi's appointment as ICICI Pru Life head will be subject to the insurance regulator, that is IRDAI, and shareholder approval. Now, coming to the point on why the stock cheered Anup Bagchi's appointment in the way that it did. The answer lies in the work Bagchi has done at ICICI Group so far. He joined ICICI in 1992, and since then, he's worked in retail banking, treasury, investment banking, small-scale industry, payment and settlement systems, wealth management business, absolutely every segment of financial services space. Bagchi has also served as the MD and CEO of ICICI Securities. It is this extensive exposure to the financial services market which investors cheered today. What would be the biggest headwinds as Anup Bagchi takes over? Well, budget announcement on taxing life insurance, large life insurance policies and growing premium under that situation. Also, potential stake sale from Prudential Life into the company and the entry of health insurance companies into life segment if composite license gets approved will increase competition and lead to some price correction. What are some of the biggest focus areas for Anup Bagchi? Bringing consistency in premium growth, steering company through various regulatory changes and potential entry into the health insurance segment. Finally, a look at what the stock has done. Since N.S. Kannan took over in 2018, the stock is more or less flat. It touched a high of about 724 in September 21 and low of 226 in March 2020. The stock is relatively cheap, trading at 1.4 times FY24 price to embedded value. Compare this to HDFC Life, which trades at 2.3 times, and SBI Life, which trades at about 2 times FY24 estimated price to embedded value.
Okay, all right, Yash, thanks very much for that. Well, moving on, the decisions to rebalance the constituents of the weightage of the Indian companies into widely tracked indices are set to kick in from tomorrow, the 17th of March. The first is the FTSE All-World All-Cap Index. The constituent changes announced during its semi-annual review could mean an inflow of $300 to $400 million into India. Second is the BSE Bharat 22 Index. CNBC-TV18's Vivek Iyer has the details on what will this mean for the Indian stock markets and the stocks of the companies involved.
Well, tomorrow is going to be an important day, as far as these passive funds are concerned, because they are the ones who closely track these indices and have to track these movements, as per the changes made, both inclusions, exclusions, as well as the weight changes. So first, let's have a look at the Bharat 22 ETF. There are no inclusions or exclusions, but a couple of weight changes that will be seen. So NTPC, NALCO, and Power Grid will be the stocks in focus. Expect, in NTPC flows of close to $35 million, in NALCO around $30 million, imported almost 2.5 times ADV, and Power Grid around $18 million of inflow. On the other hand, ITC expected to see a slightly substantial outflow of close to $70 million. All of these numbers are as per analyst estimates. But more importantly, tomorrow will be the adjustment as far as the FTSE indices are concerned. Remember, the changes were announced on February of 17th, and tomorrow is the day in which the adjustments will be done. And it's a net inflow event as far as FI flows are concerned for India. Inflows of close to $380 to $400 million is what analysts are estimating. Now, some of the top stocks that will see inflows: Kotak Mahindra Bank close to $78 to $80 million, Supreme Industries, APL Apollo Tubes, Patanjali Foods, and Solar Industries are the top stocks that will see a significant impact as far as the ADV is concerned. Now, also remember the stock that saw a very large block deal, Sona BLW, where Blackstone exited 20% stake. That stock too sees a weight up in tomorrow's trading session, inflows of close to $25 million over there. On the other hand, Gillette as well as Eris Life Sciences will be excluded from the FTSE indices.
Okay, all right, Vivek, thanks very much for that. Well, moving on, the embattled Swiss bank, Credit Suisse, has gotten a $54 billion lifeline. The Swiss National Bank is extending a covered loan facility and a short-term liquidity facility. The move comes after Credit Suisse shares hit record lows for the last couple of days, and the Saudi National Bank, which is the largest shareholder, refused to provide any fresh financial assistance, citing regulatory restrictions. But the Saudi National Bank claims that no assistance was sought. Credit Suisse, in its annual report, said it has found material weakness in its financial reporting processes for 2021 and 2022. The Swiss National Bank and market regulator said Credit Suisse, quote-unquote, meets the capital and liquidity requirements imposed on systemically important banks. Meanwhile, the chairman of Saudi National Bank, the largest shareholder in Credit Suisse, told CNBC that there has been no discussion with the bank about providing assistance. He also added that the bank is not keen on hiking its stake beyond the current 9.9%.
Back in October, you and I had a discussion, and I had multiple discussions at the time. And at the time, we articulated very clearly that we would not go beyond 9.9. Even if we desired to, there are too many complications from a regulatory and a compliance point of view globally to do that, so we were not considering that. Yesterday's message was exactly the same. I'd like to cover 3 points. Number one is that the message has not changed. It's the same message as we talked about in October.
This is not a vote of no confidence in Credit Suisse.
The second message is there has been no discussion with Credit Suisse about providing assistance. I don't know where the word assistance came from. There has been no discussions whatsoever in the past, since October, about Credit Suisse needing more capital or requiring assistance. So
in the last 24 hours, though, we've seen them go to Swiss National Bank for a lifeline.
But that was a manifestation of unfortunate reporting or chatter in the system that we had refused assistance, but we were never asked, and to my knowledge, there has not been any assistance sought. That's point number two. The third important point is the bank is on its way to do the restructuring that they've been talking about.
All right, time for a break now, but stay tuned. We'll be back in a jiffy with all of the other top stories. Welcome back. You're still tuned in to Markets Today on CNBC TV18. Let's get to the rest of the stories that we're tracking for you. The fourth headline today, Zee Entertainment fired up on reports that it is set to repay IndusInd Bank $10 million. The NCLAT has stayed the NCLT order, admitting insolvency proceedings against Zee. Surbhi is here with the details.
So Zee is on our radar today, and that is because there are reports from Bloomberg that suggest that Zee is going to repay IndusInd $10 million, and this repayment could happen as soon as Friday. Just to alert, on 8th of March, Zee had also settled disputes with IPRS, and that was worth 211 crores. Now, all of this was expected as these amounts with creditors are pretty low, and Zee would do everything in their power to wrap up their the merger with Sony. Now, some of the key dates that needs to be watched out for is 29th of March, where they have an hearing with NCLAT, and if the payment with IndusInd goes through, this will be kind of a non-event. And also another important date is 31st March, where there is an NCLT hearing, and in this hearing, the merger proceedings will move forward. We have a view from Elara Capital, where they say that Zee remains inexpensive at current valuations of 16 times one-year forward PE multiples, and they're also factoring in the delay of the merger and lower ad revenue growth due to uncertain macro environments.
Okay, all right, Surbhi, thanks very much for that. Well, on to the fifth headline today. Titan gained over 2% after Abu Dhabi Investment Authority invested $500 million in Lenskart. The company gained on the back of an expected rub-off in its eye care business valuations. Manglam is here with the details.
Well, Titan is at the high point of today's trading session, and that's perhaps on the possibility that now the street will start looking at their eye care business as a separate valuation driver, primarily because of the big announcement that came this morning, the fundraising for Lenskart, $500 million invested by ADIA at a valuation of $4.2 billion. Just looking at Lenskart's metrics, FY22, their revenues grew by around 66% to 1,500 crores with a loss of 102 crores. How does that compare with Titan's business? The eye care business in the first 9 months of this year did revenues of 524 crores and an EBIT of 96 odd crores. Assuming 2,000 crore revenue for Lenskart in FY23, this deal values them at around 17 times price to sales. If Titan, they've guided for 750 crore sales in FY23, if they go ahead and do 1,000 crores worth sales in FY24 with an EBIT of 120 odd crores and not using the high metrics but a lot more conservative numbers, 6 to 12 times price to sales multiples, this business could be worth anywhere between 6,000 to 12,000 odd crores. And this, remember, analysts haven't estimated in their sum of the parts valuation for Titan so far. So could this be a case for analysts to look at their eye care business as a valuation driver?
Okay, all right, Manglam. Thanks very much for that. Sameer Khetrapal of Jubilant FoodWorks tells CNBC TV18 that it will add over 250 Popeye stores in the medium term. In addition, Joshua Kobza, who's the CEO of the Restaurant Brands International, said India is one of the biggest priority markets for the company.
We are very excited about the response that we have received from our customers, the repeat rates that we have seen, and the satisfaction on food level. They're coming back and asking for more. We are ready to expand. I think that's kind of the big announcement. We'll add we will get to 50 stores in 1 year and 250 in the medium term. So super excited about the journey. So I think the market is huge. It is the QSR industry as a whole is poised to grow 9 to 10%. My own estimate is the chicken as a space will grow faster than that.
I'm personally very excited for Popeyes all around the world, but particularly in India. That's why I made it kind of my first international trip, because I think it's one of the biggest priorities for us all around the world.
Okay, well, in more stocks and news then, Samvardhana Motherson fell 11% after the promoter Sumitomo Wiring Systems sold 3.4% stake in multiple block deals. Vivek is here with the details.
Well, the stock in focus was Samvardhana Motherson, and it was a confirmation of a CNBC TV18 news break. Last evening we did tell you that there was going to be a likely block deal in this particular name from the Japanese promoter entity Sumitomo Wiring. Along expected lines, 3.5% of the total equity of the company changed hands via a block deal in today's trading session. And there was a notification to the exchanges from the company itself. So Sumitomo Wiring System, a Japanese company as well as a promoter of the Motherson Group, actually exited part of the stake. In fact, what they said was that the stake sale was part of the global deleveraging strategy to fund partial debt prepayment in a rising interest rate environment. In fact, what they're also saying is that they've been partners and they've been JV partners with the Motherson Group since the IPO of the company in 1993, and it's the first stake dilution by this particular group for the first time in 4 decades. What they're also saying is that they continue to remain a partner, and in fact we had access to the term sheet of this particular block deal, and as of now, there seems to be a commitment saying that there won't be a further stake sale by the Japanese promoter, at least for the next 180 days.
Okay, all right, Vivek, thanks very much for that. Well, Patanjali Foods fell nearly 3% in intraday trade after the exchanges froze promoter shares as the company failed to meet the minimum public shareholding norms. Nearly 293 million equity shares have been frozen. Patanjali Foods CEO Sanjeev Asna told CNBC-TV18 that the company was confident of complying with the norms within the next few months.
We are reasonably confident that this should occur in next couple of months. Investor meetings are already going on right now. There is reasonable confidence that we would meet every single compliance what SEBI requires to be done. Our company is very confident. Our work towards business operations in terms of the management's commitment and everything remains.
Okay, so that's Patanjali Foods, the clarification coming in from the company there. But just a quick word with regards to Eris Life Sciences. That particular company was in focus. This is after they decided to buy 9 dermatology brands from Dr. Reddy's for around 275 odd crores. These particular 9 brands generated around 61.6 crores in terms of sales in FY22, and this compares to around 52.8 crores in FY21. They have already done around 9 months in terms of the Feb sales as of FY23, 62.1 crore in terms of total sales. Now, in terms of valuations, it's around 4.4 times FY22 trailing sales, and that's largely in line with what we've seen for other acquisitions and M&A within this entire space. Now, it is interesting because Eris has really built up its portfolio when it comes to dermatology. For example, they've acquired 9 brands from Glenmark just in the month of Jan for around 340 odd crores. And now dermatology, post the Glenmark acquisition, had already risen to around 13% of total sales. And this is expected to help them propel it higher. Remember that they had also made an acquisition of Oaknet, which is a Mumbai-based company. They had picked up the company last year for around 650 odd crores. So generally, seems as though dermatology is a space that Eris Life Sciences is definitely concentrating on. And for Dr. Reddy's as well, is definitely a positive considering that they would be getting cash into their books, not to mention that they are looking to divest non-core assets and businesses. Well, with that, it's a wrap on this edition of Markets Today. Thanks very much for watching.